Investors and traders, welcome to the channel Market Chart Pattern. Today is 14th of December 2023 and I hope everyone is having a great day. So this is the day which is the day after the Federal Reserve came out yesterday, which is the 13th, the Wednesday, 13th of December 2023, and what a massive day it was in the risk assets. Now, what the Fed did is, just for information, the Fed has pivoted. So the Fed had been on a scheme to keep on raising the interest rates, the Federal Reserve Fed funds, as they are called, which is the short-term borrowing costs, to tame the inflation. And what we have seen from the statement and the dot plots which came out from the Federal Reserve yesterday, the Fed seems to have pivoted and they are on a pause and in fact looking to reduce the interest rates in next year in 2024. So that is something that was probably baked into the price, because the bottom in the stock market that we had seen in the October the 13th 2023, that was pretty strong and bottom. And you can go and watch our videos, the old videos, and we had a particular pattern formation taking place there in S&P 500, in other indices as well, but mainly the S&P 500 that we were watching. And we pretty much kind of, the pattern actually took the actual low that took place pretty much to the day. So it's pretty interesting to have a look at that pattern. We'll just shortly cover that. So what could it mean? There'll be more commentary coming in over the weekend video. And what could it be for the possible recession that people have been talking about? And for that, I will do a video looking at the 2-year Treasury notes, 2-year Treasury bill basically, and what that particular pattern means, whether it is able to foretell a recession, whether we're going to have a soft landing, etc. We'll discuss that in the video over the weekend. So let's get back to our video, and what we are looking at is the 10-year Treasury note futures. As you know that we basically like to take a look at the debt markets through the eyes of the Treasury notes and long bond futures, to see what the market is pricing in terms of the interest rate. So here, over the course of 19th of October, we have seen a pretty massive, a nice rally in this market, and also in the long bond futures market as well, which we'll just cover next. And when this was happening here, we had these levels that we were watching here, and our commentary was that we could possibly be at a place where we could be starting a multi-month rally in this market, and we were looking for certain kind of symmetry, and that is the symmetry right here. When this symmetric move was broken to the upside, we knew that the rally was going to get started and the market was looking to get much higher. And where we are right now is right at the 61.8% Fibonacci retracement, right from these highs. And also the one thing that I really want to point out is the concept of the bearish symmetry. So these are the, by the magnitude, the previous rallies have been, and every time in this cycle of lower prices, the price has met with strong resistance and it has moved lower. So we are right there. We have two things going on. We have this 61.8% Fibonacci retracement, and also we have this symmetry, the bearish symmetry coming in. So it'll be interesting to see over the course of next week whether the market is able to break out of it to the upside. Then we could see a sustained rally. At least we'll see a pullback otherwise. So this is what we are looking at in the 10-year Treasury note. Let's take a look at the long bond futures. I typed in the wrong symbol, excuse me for that. So this is the chart of the 30-year Treasury bond futures. It's also known as the long bond future because of its long duration of 30 years, which is pretty long. And here what we are seeing is something similar to what we saw for the 10-year treasury note. Here when this bottom was being formed, here we were watching this level. I'll show you the particular level on the weekly chart. But this level, we were actually looking for a little bit higher, where the bottom should come in, but the momentum was so strong that it actually went down to 107, which is 1.618 Fibonacci expansion of this move, of this range here. And where we are here right now is the 61.8% Fibonacci retracement. Here we go, of these highs to these lows, and this is the bearish symmetry, similar to what we have going on for the 10-year treasury note market. But this one, the 30-year treasury bond futures, they are stronger from a price action perspective, and they have moved a little bit higher, right at the 200-day moving average as well. So what this means is there are a number of things going on around here, and if the market is able to keep on rallying above from this level, that's going to be really good news for this for the price, for the bond futures, and indication of lower interest rates, which should also help stock market as well. And here we go, this is the weekly chart. Just because we are at certain points, as shown on the daily chart, there could at least be some sort of a pullback that could be expected if the rally does in fact tend to stop here, although for a moment. Okay, so let's get back to the stock market. So we are going to take a look at the S&P 500, and what we can see is that here we go, it has been a very strong move of the lows of end of October. And what we have seen is that we were watching for this pattern formation, this pink shaded area, and we were able to actually nail this this formation right here, pretty much very close to the actual day. So that's good. You can actually watch the old videos when we were looking at this level, and then we were watching for the bearish symmetry, and once the bearish symmetry was broken down, we were actually getting very bullish about this. In the last video that we did, we were looking at this level, 4740 roughly speaking, because that was the 1.272 Fibonacci expansion of this BC swing. Now what we have going on is something very interesting, because we have this new possible pattern formation, which is this a one-to-one price projection of ABCD right here, which is in fact the CD swing of the previous one-to-one price projection, the ABCD pattern highlighted in blue. So what we are looking at is possibly this market could actually extend to 4,900 to complete this D point, where we also have the 1.618 expansion of this new BC swing right here, if our analysis is correct. And the interesting thing is that where the price is right now, this is exact level that we mentioned in our last video. The market could find some resistance here, maybe even pull back, or there might be some attempt for a couple of days at least. Maybe some sort of a pullback that might happen, and the price might catch up with this moving 20-day moving average, but there's a possibility we could have a completed ABCD pattern and 1.618 expansion at 49.10 level, but the market has to get through these all-time highs, which took place 4th of January 2022, and in fact this level could act like a magnet as well, where the price might actually, if it pulls back, then it might actually try to grab that level pretty quickly, and then we have this 4900 level, 4910 level, excuse me, where we are looking for this pattern formation to complete. Really quickly looking at the weekly chart, and this is what we see. The interesting thing in this chart is we had pointed out this trend line right here. Since the lows of March of 2020, it has been just totally intact, no problems there, and these are the levels that we are watching. Let's go and take a look at the Dow Jones through the eyes of the Dow Jones E-mini Dow Jones futures. Similar kind of a pattern, we have this possibility of this bigger ABCD pattern to complete right here around 37,900 to 38,100 roughly speaking right here. That's gonna be the 1.618 expansion of this smaller swing right here, also the completion of this big one-to-one price projection, which we like to call as ABCD. Above here we also have one level around 39,000. That's this 1.272 Fibonacci expansion of this entire decline right here. Let me try to draw it just to indicate what I'm talking about. That's quite a bit away. So we are going to focus at this level for the short term, and of course we have to look everything in conjunction with the other markets such as the S&P 500 and also the NQ. So let's go and have a look at the NASDAQ 100 futures. So this market of course has been the strongest one this year in 2023. The tech stocks have been leading, and mainly it's been the magnificent seven that we like to take a look at in a separate video, which I'll be doing probably tomorrow or over the weekend. You know, when the bear market was going on, starting in November of 2021, this market was the leader to the downside. In 2023, this market has been the leader to the upside, and this is mainly a function of the interest rates, because around this 13th of October 2022 is when the market actually started to form a bottoming process, because of the pace of interest rates were likely to reduce in markets perception. And then of course we have seen a nice move higher, and then from the late October of 2023, a really strong move to the upside. It has broken above the 1.272 expansion and likely to get to 17,250, which is the 1.618 expansion of this swing right here. And of course it has broken above the all-time highs, so that's a new record for this index. Now let's take a look at the Russell 2000. Okay, I'm going to move to the weekly chart for this. So Russell 2000, as you know, is the small caps, and these are the companies which do not have as strong as the balance sheet compared to the, for example, Magnificent Seven or the bigger companies. So they tend to get really highly impacted by the interest rate movement. And what we have seen is over the course of a year and a half, about 18 months now, the market has just gone nowhere. It is in a trading range, and we have seen double tops, double bottoms. In fact, we have seen triple bottoms, triple tops. So a bottom here, bottom here, bottom here, top here, top here, top here. And now maybe this is an attempt to get out of this range to either of these sides. So normally when the market gets to the top of a range, and if there is some sort of a breakout, it's rarely that the breakout is sustained. Normally it would move back into the range, especially when we are looking at a mean reverting asset class such as stock indices. There is a likelihood that if there is a good breakout, it might actually retrace further down, maybe to the middle of the range, and then we have a nice rally higher, which eventually takes this range out of the picture to the upside, hopefully. But what is interesting is to watch that the market has been going in a really long range for about a year and a half, right at the 50% of this move of the March 2020 to the highs, going to 8th of November 2021. That week, because we are looking at the weekly chart. Just from the perspective of a retracement, so the other interesting fact is that it's just been range bound. 50% of this range here, 50% of this range from the highs to the lows right here, and this is where this market has been for a very long time now, and it'll be interesting to see the breakout when it happens. So this is what we are watching in our analysis for the key US stock markets that we like to take a look at. let's take a look at the New York Stock Exchange Composite Index. This is a very interesting index to take a look at because it has the ADRs as well. So those companies which are actually not based in the United States, but their stock is traded as an ADR. So for example, let's say Shell, the oil company, their primary exchange might be something else such as London Stock Exchange, but it's also traded as an ADR on the New York Stock Exchange in US dollars. So those sort of companies, for example, and what we see is a really nice break of this 78.6% Fibonacci retracement over the course of last couple of days, and it's following a pattern which is very similar to the pattern that we have seen in Dow Jones. This is a symmetric move right here, and off we go, a very nice move higher. So it's also interesting to see that some of the stocks which are outside of the United States are also getting a bid, and this market is quite far away from its all-time highs, but the Dow Jones did break or form new all-time highs, but it looks like it might be playing a catch-up, and there might be nice opportunities in some overseas stocks as well. So thank you very much for watching the video. Apologies if the video is a little bit longer, but we had to cover this, and I wanted to cover it on a day after the Fed, because I wanted to see what the price action would be like. And also just very quickly, I'll take a look at some of the key stocks. Just look at Apple, for example. I will cover this in a lot more detail in our video for these individual stocks. The price action today has been kind of muted, so this is something that we are just watching what's going on, because these stocks have moved massively from their bottom. So this is like what was happening beginning of 2023. It's all documented. We were really calling for some sort of a nice bottom to form here, and again here our pattern wasn't exactly met, but it came pretty close, and then when the bearish symmetry was broken, we knew that it's going to go on to the upside. So it's all documented in the videos you can watch. The most interesting one is this Microsoft, a nice stock, but it seems to have found good resistance from our level, and look, massive dovish news coming out of Federal Reserve, but the price action is a little bit muted. And here on Amazon, so here we go, it actually sold off on this day, and this stock likes to do double tops, double bottoms. Where we do see a nice price action is Shopify. In fact, the Shopify is getting to very close to our target of $78 to $80. And then just take a look at Netflix. Yeah, maybe possibly a double bottom around here, not confirmed fully yet. So just wanted to show you this, that as we are moving into this new paradigm where the interest rates are likely to fall per what the Federal Reserve has stated, we need to be careful with the selection of the stocks, because some of the stocks which might have performed really well, even during the scenarios when interest rates were going higher, they might not necessarily benefit that much because the environment is changing, and some of these stocks which were more beaten up might actually start to perform much better as well, just from a price action perspective, not saying from their balance sheet or for the Magnificent Seven, etc., because they tend to move on their own. But I will begin to cover some other stocks as well. I'll probably even start a segment about some different stocks to take a look at outside Magnificent Seven as well, because things will begin to change for 2024, but we need to be very careful with these levels, because as our patterns begin to complete, we need to be cautious, because we could see some good pullbacks happen into the marketplace. So thank you very much for watching the video, and if you like our analysis, how we look at the markets from a technical analysis perspective, using Fibonacci retracements, price projections and expansions, and pattern recognition, please do subscribe to the channel. And if you found this video of educational value, then please hit that like button, and also if you do subscribe, then also hit that bell icon button. That way you will know when the new videos are posted, so you will not miss on anything. Thank you very much. Good luck and good trading.